Hello investors, welcome to the channel. In today's video, I'm going to be walking you through two of the stocks I have in my portfolio that's going to be geared towards growth. I'm going to go ahead and give you a detailed explanation of why I have it and the upside that I see in the near future. For those of you that are new here, welcome. My name is Tim, and I do everything in my power in order for you to keep pushing your investments. So, I am that guy that started off this investment portfolio with only $65. The reason I did that is I want to show everyone, especially people new to the stock market, that it does not matter how you start investing. The most important thing is to get started today. Also, it does not matter how much money you have. You don't need thousands of dollars or hundreds of dollars to get invested. In order to get started, go ahead and open up a brokerage firm. I will leave some links in the description to the brokerage firm that I use personally. Once you do that, you could go ahead and start making deposits. The deposits you're going to be doing is going to be regular deposits of any amount, $1, $5, it does not matter. Most of the new brokerages out there, they allow you to go ahead and deposit a minimum of $1 to get you started. Once that's completed, then you go ahead and make consistent deposits into the account. Once that's sorted out, now you're going to begin investing. So for my personal portfolio, I started off with $65 and I promised myself to add $250 every single month. Which once I committed to that, I then went ahead and selected 10 stocks in which to start investing. Now, my professional advice is do not go ahead and select stocks. Go ahead and select what's known as ETFs or exchange traded funds. Those are better, especially if you are new to investing. The reason I decided to be a stock picker is because I have been in the market for more than 10 years, so I have a pretty good knowledge of how things work. So I'm going to introduce you to the 10 stocks I have, but I'm going to focus today on the two I have primarily for growth. So currently the portfolio stands at $750 and I should be adding another $250 to hit our first milestone of $1,000. So let's go ahead into the 10 stocks. So I divided the 10 stocks into three categories. The first category is going to be these four stocks here, which is going to be for value stocks. Value stocks are going to grow over time, but not exponentially. But what they do is that they keep your portfolio stable. The next four stocks here, which is going to be these four here, are here primarily for dividends. Dividend stocks allow you to get paid on a consistent basis. For my portfolio, I'm going to get paid on a monthly basis and also on a quarterly basis because of the stocks I selected. Now, the last two is going to be these two here, which is going to be growth stocks. And this is where the focus of today's video is going to be. So let's go ahead and jump into the first growth stocks, which is going to be Oscar Health. And that ticker is going to be OSCR. Okay, so here we are on Oscar Health, and as of making this video, the current share price of Oscar Health is going to be $13.16. My market value of Oscar Health is going to be $46.36, and my average cost is going to be $14.19. As you can already tell, my average cost is a lot higher than the current cost of the stock right now. My average cost, $14.19, is higher than the current value, which is going to be $13.90 per share. So I am down around $3.64, and that equals to a 7% decline. Now, for most people that are just getting started with investing, this is going to look as something bad. But for me, that's been doing this for quite a while, this is an opportunity. If you go ahead and start investing today, you went ahead, you do your own due diligence, and you start choosing stocks or ETF, then you have a strong thesis of whatever asset you chose. So in this case, for me, it's going to be Oscar Health. Because my thesis is strong and the share price went down, in my mind, this gives me an opportunity for me to pick up even more shares at an even lower discounted price. So that's what I'm going to be doing. I'm going to be buying even more of Oscar. Now, the reason why my current value is $46.36 is because I'm investing by a method known as DCA or dollar cost average. With the dollar cost average method, what it does is that you're allowed to contribute a fixed amount on a consistent basis, and that allows you to grow a position in any stock of your choice. So in this case, I'm doing a monthly buy of just $10 in just Oscar Health only. So every single month, when the money hits the portfolio, $10 of that money is going to be used to buy Oscar Health. It's not going to matter what the price of Oscar Health is, it's still going to buy. This is what's known as the set it and forget it strategy. The set it and forget it strategy takes out all the thinking work for you. You just put this on automatic and it just goes ahead and happen. And all you have to do then is just sit back, relax, and wait. Only time is going to help you understand whether you have made a mistake or not, and only time is going to show you whether your account is going to be compounding positively as time goes on. Now, one of the reasons I chose Oscar Health as a growth stock is because Oscar Health is in the healthcare sector. The healthcare sector is a sector I do not have in the portfolio. As I showed you, I have the value stocks, I have the dividend stocks. So Oscar Health gives me some diversification for the overall portfolio. One of my main reasons as well for acquiring Oscar Health is because of not only the sector, but how it runs its business. Oscar Health is an insurance company, but above all that, it's merely a technology platform. So no heavy infrastructure. So I like these kind of stocks that usually have platforms as the basis of their business. Of course, this is just my thesis, and this is just what I like because this is what I'm going to base my performance of the portfolio on. Now, if we were to go down a bit further, another reason I like Oscar Health is because Oscar Health being in the health sector, Oscar Health is pretty much the baby in this sector. Oscar Health just got listed in 2021 and it has a very small market cap of 3.94 billion. Oscar Health is in competition with some of the bigger guys, which is going to be Molina Healthcare, Merck, and the biggest of them all, United Health. Once Oscar Health is able to take some market share from these big guys, then they're going to be able to grow consistently over time. Now, another reason I like Oscar Health is because the PE right here, the price per earnings ratio right here, although it's a negative PE ratio, if you go back and do your due diligence, you could see that this number is becoming smaller and smaller. So pretty soon, Oscar Health will be able to be having a positive price per earnings ratio. So right there, that's several reasons I like Oscar Health. And the most important reason I like Oscar Health is because I like to acquire stocks that I think that's a very good stock at a reduced value. You see the 52-week high here is around $23.80, but my average cost is around $14. So I think I'm getting it at a very, very good price. Now, that's my overall view on Oscar Health. And I do anticipate Oscar Health growing over time. Healthcare sector is a very risky sector in the market. That's why Oscar Health, once again, although it's here primarily for growth, it only represents a very small part of my portfolio. Now, the other part of my portfolio that I use in order to get exponential growth is going to be New Holdings. New is a digital bank, and as I go along, I'm going to show you what it has in common with Oscar Health. So new current share price is at 13.90, and I know Oscar Health at 13.90. This is not a plan, I swear to you. So if you go down, you're gonna see my average cost on new is gonna be $16.17, which is higher than the current price. So once again, I'm down. The nominal value I'm down is going to be $7.02, which represents a 14% downward. Again, this gives me an opportunity to go ahead and keep investing in new in order to lower my average cost and increase my portfolio size with new. Now, if I were to go down, just like Oscar Health, I have what's known as a regular buy or recurring investment on new as well. So every month, once the money hits the portfolio, I'm going to go ahead and buy $10 worth of new holding despite whatever the price is. Once again, the set it and forget it strategy. And once again, this is going to be the DCA or dollar cost average strategy. Both of these are automatic strategy that takes out all the guesswork out of investing. Now with new, this company is an offshore company, means it's not in the US. Now, one of the reasons I like about new is the current PE. The current PE is 23.40. One of its major competitors, which is going to be SoFi, has a PE ratio of I think around 44. So this is trading at half the PE of SoFi. So I like that. Another reason I like new is because of the market cap. The market cap right here is 67 billion. Now, it's competitor, once again, we're going to use this to compare with SoFi. SoFi's market cap is around, I believe, 22 billion. So the market cap here of New is going to be 3 times the market cap of SoFi. Now, although it has a higher market cap than SoFi, although it has a lower PE earnings than SoFi, the current share price is a lot lower than SoFi. And that's simply because it's an offshore company. Our American companies are valued at a much higher basis than companies that are offshore. Now, new has been growing consistently, and you could see at the current price right now at 13.90, it is still way off the 52-week low. So I would not mind if the price goes down just a tad more, which is going to allow me to go ahead and just invest more and grow my positions in new holdings. Now, like I mentioned, new holdings is also in my portfolio in order to give me exponential growth, and that should be compounded over time. So although the stock shows that it's down right now, I am not worried about that. I will continue doing what I'm doing, which is going to be automatically investing, automatically dollar cost averaging into this stock, and then wait until time compounds and then see what the result is. Now, I'm not going to blindly invest in any stock in this portfolio. I'm going to keep doing what I'm doing. And after a couple months or probably a couple years, I'm going to reevaluate all the stocks in the portfolio based on performance. And at that time, I could make a decision whether I could continue doing what I'm doing or I need to change the strategy. So there you have it, investors. That is the 2 stocks I have in my portfolio, primarily for exponential growth. Once again, my name is Tim, and I do provide you with information that's going to help you to start investing not tomorrow, but today. In order for you to get these updated videos and track my portfolio as I grow and compound over time, then go ahead, like the video, subscribe to the channel. Once again, I do everything in my power in order to help you keep pushing your investments.